So here's our checklist again, so we can just do a quick recap of what we've learned today. And obviously, if you haven't already, print this, cut it out, put it on your wall, because this is how we're going to go about making a trade. Again, we start with what? We got to pick some stocks. So how do we do that? We just write a big list and look up the symbols and make sure they're publicly traded companies. Once we have a list of stocks we like and we don't like, then we're going to check liquidity, which we all know is the bid-ask spread rules, and make sure they fit our rules for liquidity. Then we're going to create a watch list. Now, we can create our own. We can use the ones in Doe, but the important thing about remembering with your watch list is you always want to check for earnings before you make a trade. You want to make sure that your option is going to expire before the earnings take place. Otherwise, we're not going to make a trade in that stock. There's plenty of other stocks we can trade in. Then, when we want to make a trade every morning, we're going to look at volatility of each stock. Greater than 50, we know we sell verticals. Less than 50, we know we buy verticals. And we prefer to sell verticals because the POP is higher. And finally, how do we decide on what direction we believe the stock is going in? Well, if we do it like the pros, we're going to be a contrarian. And we're going to make an assumption which is counterintuitive, which is actually the opposite of what the market is doing. So when people are greedy, which means the stock is going up, we're going to bet it's going down. When the stock is going down and people are scared and they're selling it like crazy, we're going to bet the opposite and bet the stock is going up. And that is how we make a trade.